Let's do this. We're riding the storm out, baby. Volatility is back up for the monthly close, and now we got to figure out what is coming up next. Hey guys, it's Keith Allen. Let me get rid of all of this technical stuff that's flashing all around me and just throw out this quick bit of housekeeping before we start. I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I share or say should be considered trading or investment advice. Trading is risky. Do your own research. Never risk more than you can afford to lose. And with that, let's just jump in, right? It's been an interesting 24 hours or so, right? No doubt about it. Of course, yesterday we said yesterday was the calm before the storm. Kind of the whole weekend was the calm before the storm. And today, that storm is definitely building here. Yesterday, we talked about the Hong Kong ETFs, right? Spot ETFs for Bitcoin and ETH launched on, well, on April 30th. For those of us here in the US, that was last night, and that trading day is already over and done with. Some people expected, things to shoot up, but it didn't happen, right? And we talked about that yesterday. I felt like, hey, just maybe they would take a more tempered approach because look at what's happening right now. Look at the PA that we've got going on right now. We have, of course, the monthly close happening today. We have the FOMC meeting tomorrow and Fed Chair Powell's speech tomorrow. As far as the FOMC is concerned, nobody is expecting a rate cut or a rate hike at this moment. But really, it's all about what Fed Chair Powell telegraphs through his comments, right? Is he going to allude to any discussions about, hey, maybe it's going to be fewer than 3 rate cuts? Maybe it's going to be 2, maybe it's going to be 1, or is he even going to prepare us for possibly none? I think the market is really starting to bake in what they foresee happening. But nonetheless, the market always reacts to his commentary. Often those are knee-jerk reactions and whales playing games until things settle out the following day. So, with a monthly candle close happening today, is it going to be hooray for May, or is it going to be a May go away month? And as we look at the charts right now, let me get into a screen share and show you some stuff that might help you formulate some decisions as we move into the monthly close. We'll start here with fire charts, and this might offer a little bit of comfort that we see more bid liquidity coming in to the 60K level to support what's already there. And will this be enough to give us the bounce that we need? I'm going to drive this in to a lower time frame and see, you can see the ladder's actually building below it. A little bit above, not as much as I'd really like to see just yet, but we still got time. It's not over yet. Also, very noteworthy here. You see this orange. This is in fire charts bin CVD. All of the order classes are separated by order size. So orange being the smallest class, $100 to $1,000 orders. And oh, look, it looks like the bottom of that gets cut off here. Interesting. I'll have to reformat my little template here, but nonetheless, you can see this robust buying started at this level. Now, a lot of people think, oh, these are the small orders. This is just retail. Well, I've got news for you. It's not just retail. Retail certainly lives in this class, but it looks like, at least, especially for the last 24 hours or so, that this class is being dominated by a well-controlled TWAP bot. If we switch over to the absolute CVD, we can actually see how much money they've spent via market orders, and you're looking at 50 million bucks almost in the last 24 hours. And look at that compared to what the other order classes are doing. Even whales have only are only a net negative 6 million out in this time frame. So just the sheer volume that we're seeing and the even slope of this line is an indication that that order class is being dominated by a TWAP bot. And, that makes sense, right? They're buying the dip. So no fault with that, and no fault with Hong Kong investors pacing themselves. We talked about it yesterday. I got to say, thanks to Cointelegraph for giving me a shout on that commentary. And there's a lot of news about the Hong Kong ETFs, and we're going to jump into that here because I think we got to put things in perspective for sure. CoinDesk did an article And the meat of the article is good, but the headline to me is a little bit disappointing. It says Bitcoin slips under 62K as Hong Kong ETFs disappoint. Did they really disappoint? Did anybody really expect them to come aping in with price trading, with Bitcoin trading close to 65K, knowing that we had a monthly close today and knowing that Fed Chair Powell is going to speak tomorrow and knowing that there was likely an opportunity to buy cheaper? I, for one, did not. So things kind of going according to plan as far as I'm concerned. And I am happy to have the opportunity to buy lower. Potentially we get a retest here down to 59K. But right now, as I just showed you, we do see some additional bid liquidity coming into the range that just might protect that. We'll see, right? This hasn't played out yet. We still have several hours to go before the monthly close. So, that's what we look forward to. Now, in terms of the monthly close, is it likely that we could see a green monthly close? That's a tall order, right? Last month closed at over 71,000. So, in my opinion, very unlikely that we see a green monthly close today, unless something insane happens. And in terms of what I'll be looking for after the monthly close, I'll be looking for a potential new signal from trend precognition. We can see right here on the A1 slope line that momentum still trending down. Now, if we get a wick down here, right, and we're kind of in that territory right now, we could conceivably see a reversion here, and that's something that I'll be watching for after the monthly close. So we'll stay tuned to that. A guy that I've been following on Twitter, on X, Twix, whatever you want to call it, I don't really care. Has really been doing a great job of tracking the ETF scene, both domestically and now abroad. I want to go over to, I saved this article over here. Here we go. Eric Backelness. He actually works for Bloomberg, and he does a great job of breaking things down and giving us some perspective about these ETFs. According to his analysis, the Hong Kong crypto ETF volume breakdown was a total of 12.4 million, which is, in his opinion, a lot for that market, equivalent to about 1.6 billion in US. So that's actually pretty strong, right? That's actually very strong. Now, there's also word that we're going to see more potential ETFs coming out of the Middle East, out of Dubai specifically, and perhaps other Asian markets. So they feel like they have a first mover advantage in that part of the world out of Hong Kong. So we'll see what happens. I think Singapore was the other one that was discussing a potential ETF coming up soon. So nonetheless, this is going to develop, right? This is going to develop over time. And so the net effect of this is still bullish for long-term Bitcoin, in my opinion, because it's an indication that there's more interest. There's more interest from TradFi investors to get involved and get exposure to Bitcoin, and in this case, also ETH. So it may not be the rocket rise that happened after the US-based ETFs were launched, right? We had that initial pullback, correction, and then things took off to the races. So maybe we watch this one brew as well. I think that they're looking for those opportunities, and when those opportunities come, when those dips come, they'll see. We should see buying and demand increase. So let's go back to the charts here and look at where we sit now. What the expectations are for the next 24, 48 hours or so, and what invalidations we should identify in case things move against us. So again, here's the monthly candle, and it's trying to bottom out right now. We're at 61.2, almost 61.300. The low for the day. Oh, let me get to the daily. The low for the day, we had a wick that went down to 60,500 or so. Okay. And we seem to be bouncing from there. Whether this bounce is going to continue, or we're going to see another retest of that today, potentially tomorrow, around Chair Powell's comments, that's absolutely a possibility. In terms of the Fed, tomorrow, FOMC going to speak at FOMC meeting is in the afternoon, and the Fed press conference comes out at 1:30 p.m. Eastern time. That's New York time for those of you around the world. So we'll be watching and listening to that very, very closely. And then, of course, we round out the week with more economic data that, in my opinion, unless we just have a major miss, a major beat, or a major miss, then it's kind of a nothing burger at this point, right? Unless we just get like an astronomical, a spike in unemployment, or a big move down in inflation, then things could change. But the market has been waiting. At least the Fed has been waiting for that unemployment spike, and it just hasn't materialized. So, are they going to try and manufacture one by raising rates again, or are they just going to stay the course? And I would expect them to stay the course at this point, and just patiently wait for things to grind down. So back to the charts here. Another look at ETFs on the U.S. side, real quick. Yesterday, a pretty benign day for U.S. ETFs as well, and this is consistent with what we saw in Hong Kong. Right, Hong Kong buyers came in, but they came in tempered, and U.S. was also quite measured yesterday. Right, not a lot of volume. Outflows for even the outflows for Grayscale were minimal, because they know there's better prices around the corner for those that want to sell. So these are all things that, to me, build the narrative about what we can expect in terms of price. And again, we see some bid liquidity coming in now. This is probably the best thing that bulls could see right now, and that's bid liquidity coming in to this range above 60K. There's not a ton yet, but the fact that we have some building here trying to front run it or even protect these levels down here is very, very important. What's also important is that since this has all been cleared out, it is smooth sailing. If price can clear this level 61.5, then there's very, very little to slow things down moving back up to the 64 range. So, and then potentially beyond, right? We have solid resistance here at 65.5, and then a little bit of liquidity here that could slow things down. It's not opened up as much as this, but this certainly is not impenetrable, in my opinion. And if we get back up to these levels, then we have really a smooth shot to get to 70, where really the heavy resistance is. You would think that 69K, being the long standing resistance level that it's been, would be stronger resistance, but there's really only about 4 million there stacked on Binance right now. So if we go back to the candle chart, we can see that even though this is a strong technical level at 69K, there's not a ton of sentiment for that level at the moment, and it's really 70K and above, 70 to 75K. Here's our current all-time high, just shy of 74K, and we have just hundreds of millions in ask liquidity stacked here, and that equates to billions in shorts that are in this range here. So those short holders might be considering closing out in these levels. They might be looking for a push below those levels to maybe close those shorts. But gosh, I would be very, very cautious here if I was short, because we could see a reversion, building at some point. So, this is, if they shorted from the high, this is a fantastic move, right? That was a fantastic trade for anybody that took it. But it's only a fantastic trade if you close it in profit. So keep that in mind. That's not advice. That's just my impression on things. You do whatever works for you. I do what works for me. With that, man, I think we've got a lot to think about and a lot to watch here over the next 24 hours. Again, really focused on the monthly close tonight and what could potentially be happening with the Fed tomorrow. So in terms of invalidations to the downside, we've talked about this quite a bit. 59K, right? It's actually about 59.3 on Bitstamp. It's around 59,250 on Coinbase. It's going to be vary from exchange to exchange, but the lower low is the one that needs to be protected. If we lose this level here, right, that's just above 59K. If we lose this level here, then my focus goes to this 50 to 52K range. And if we lose that level, then my focus goes to this much longer consolidation range. And as I've said time and time again, these consolidation ranges really are the foundation for the big moves. Look, we had it here, we had it here. What is a concern to me is that neither of these levels have been retested, which makes them ripe for a retest. The good news is there's currently little to no sentiment for that because, as you can see, the liquidity is concentrated here in the 58 to 60K range, and what would be 50 to 52? 50 to 52 down here certainly has some bid liquidity there, but not a big concentration. This is what we're looking for. We're looking for the brightest spot in the chart to serve as the springboard for the next move. If that bright spot appears above, then it's going to be a push down. If that bright spot appears down low, and these bright spots, by the way, are relative to the volume in the chart, as you can see here. And these are the kinds of moves that the kinds of concentrations of liquidity we tend to see prior to big moves up. So in the grand scheme of things, this is building, right? This is building, and now up to about 70 million. What we want to see is, pardon me for being a little greedy, we want to see more. Okay. And that would be consistent with what we have seen historically in terms of these larger moves, right? We want to see deep concentrations of liquidity on the bid side to push things up. It's building, and this is good, but we're not there yet. So let's see what happens at the monthly close. Let's see what happens around the FOMC, and let's see what happens if we get a retest down to this level. Will we see the liquidity come in and strengthen support in this level as we've seen so far this morning? Will that continue, or is it going to break down? That's what it comes down to. These are the questions I ask myself, and these are the things that we're watching in terms of what the order flow is right now. Obviously, this is a large institutional size entity that's TWAPing over 50 million in the last 24 hours on this dip. They're not doing that for no reason. They're doing that because they think the price is going to appreciate, and they're taking advantage of that opportunity to dollar cost average their way into this position. In terms of what's happening in the shorter term with the other order classes, you can see that purple whales also took advantage to buy that dip, and well, it's a bit tempered, but things are moving in the right direction. Meanwhile, brown mega whales did offload a bit here at the high, right towards the top, as one would expect, right? So buying dips, selling rips. That's what you do. That's how you make money in this game. Hope that helps you out. Hope that gives you some insight into what could be developing here over the next 24 hours. If you like the analysis, I sure do like you guys following along, and I appreciate all the comments. And good morning, Zach and Connor, and well, I can't read the last guy's name because it's in Chinese, but or Korean, but hello to you. Let's see. Connor had a question. How are the order books looking since market open? Probably more volatility since Powell comments are released. Well, Powell's comments aren't going to be released until tomorrow, but yes, we're seeing the volatility kind of play out now, right? So we're looking at fire charts here, and we can see, let me zoom into this and give you a little more contrast to make it easier for you to see, because I know the resolution on some of these streams gets compressed a bit. You can see more bid liquidity coming in here above 60K, and that's very, very good to see. You can see some more coming in below 60K, insulating this level. Also very, very good to see. You see more coming in at 58. Also very, very good to see. So ultimately, to get this push up above 65K and back into the, to take a run at that 70K level, we need to see more of this. We need to see deeper concentrations, more of this building, to establish a solid foundation for that leg up. We've had multiple retests of support down here, and we could certainly get another one, right? But man, if we clear this month with with the full candle above this 59K level with no wicks below, then that would be very, very strong to me. If it wicks below, if we get a last minute wick, which would be unfortunate in my opinion, and well, let's face it, the market likes to serve up fuckeries that way. If we get a wick below this, that would be a sign of weakness. And then I would be more concerned about a trip to this level. So this really is my invalidation here. That's the level I'm watching the closest for sure, without a doubt. So with that, I'm going to wrap it, guys. I hope this helps you out. I hope this gives you some insight and helps you maybe calm you a little bit off the ledge here, because this dip, in my opinion, is not anything to panic over. It's a potential opportunity. Now, if you're over leveraged and you're going to get, in jeopardy of getting liquidated here, that could be a problem. I'm not leveraged, so not a problem for me. You do what works for you. We'll wrap it at that, guys. And again, if anything major develops, I'll do my best to give you guys an update through the day. But I got a busy afternoon. Got volleyball coaching for my daughter this afternoon, and a whole lot more going on. So appreciate you guys following. If you like the content, please smash all the buttons. Help me grow the channel. Leave a comment, and I will respond back. I always do. I engage with all the comments, each and every one of them. So I appreciate you guys. Thanks again, guys. Make it a great day, right? We got a lot to look forward to here in the coming days and weeks as Bitcoin in this post-halving environment is doing what it normally does, and things are about to change. Have a great day.